This content reflects my own personal opinions and is not financial advice. With that said, let's kick off today's episode. Hey, welcome back to this midweek special. Institutions just made their biggest move yet into real world assets, and three massive announcements hit at the same time. Even the Federal Reserve just shifted its stance. So here's the question. Are we watching the real RWA breakout moment right now? Alright, so here's the first of the three announcements. Ondo wins approval to bring tokenized stocks and ETFs to 30 European countries. This is absolutely massive. If you cast your minds back to its origin, Ondo Finance have started out as being a major and leading tokenized treasurer, right? So it helped the US government bonds to be tokenized on the blockchain. That was the actual unique selling proposition behind Ondo Finance. But as we've seen through this announcement, it's not just stopping there. It's trying to branch out into other areas, into other use cases. In this case, tokenizing stocks and equities and even ETF products to a handful of European nations. Now, this is very important because Europe is, for me, that has the leading crypto regulation, even more so than the US, because it's all held within this MiCA regulation, which is like the umbrella regulation for everything to do with crypto. So there is no need to actually sign off executive orders or going at piecemeal introducing a piece of legislation for stablecoins or a separate piece of legislation for the rest of the digital assets, which is how the US is currently governing its regulatory regime behind crypto. It's not the case with Europe. It's all harmonized into one single crypto regulation, which is called MiCA. It governs crypto across the entire Eurozone continent. So this is a quick win for Ondo to just step into a single continent that just simply has to deal with one crypto regulation as opposed to different types of regulations by member state. So this is an additional advantage that Europe has to offer, right? So that's very, very interesting. And if I just show you an interesting chart just to show you how big Ondo is and how it started out from nothing to where it is today, you can see that it has almost $1.8 billion of total value locked, TVL, invested into the asset class, into Ondo Finance. As I said, it actually has started out as being tokenizing US Treasury bonds. So you got Ondo short-term US government bond fund that I'm showing you here. That's how it started out its journey. But then you can see through time, it's gone into, as you can see, there's a whole watch of listed ETF products prepended by iShares. Those are ETF products, which is the ones that I've just mentioned in the article. Those ones that have been added as new tokenized funds in Ondo in its blockchain. And then you've got some other equities and stocks. You've got Tesla there, Eli Lilly, which is a pharmaceutical. You've got even Lockheed and Martin. That's another example of a Ondo tokenized equity. Pfizer in the pharmaceutical space, Nvidia. So you can see, just going through this rather interesting resource, rwa.xyz on the top left, you can consult actual on-chain data, live data, not speculation, live data, that it is present in each and every one of these RWA coin projects in this one-stop shop website. So I encourage you to visit that. And you can see it started out as nothing and is growing exponentially through time. So Ondo Finance is definitely one that we should consider investing at least a proportionate amount of our portfolio into Ondo Finance. The next interesting article announcement. So Citi and Swift Bank just wrapped a trial that settled payments between fiat and digital currencies. They used USDC, which is Circle stablecoin, and blockchain and the Swift's messaging system to prove real interoperability is now possible. So again, I've explained in several videos, several of my episodes, the actual need to bridge TradeFi into the blockchain, right, into the digital realm. And the one way you can achieve that is through stablecoins. And stablecoins is the major part that brings that wealth. So it's of no surprise at all that the major banking giants have woken up to the fact that they need to team up with Swift and see how they can bring about that wealth from the physical analog world into the blockchain. So this is very important news because it's a regulated banking entity. So this is where the wind is blowing, and this is phenomenal news. Another banking giant, HSBC, its competitor, which is a $3 trillion HSBC, one of the largest banks to offer tokenized deposits to US and UAE clients. Real bank deposits, but on-chain and available 24/7. So why they're doing this? You may be asking, how is this different from how I deposit my money in the bank account? Well, we all know the drawbacks, right? One, which is obvious, is the restricted opening hours, right? We have to walk into our bank branch or even to our automatic teller machines, which may or may not be available. I mean, I've come across ATMs where they're out of service. This is actually significant because if you go to countries where they don't even have any bank branches, or even small towns or villages where they are faced with the predicament of closing down their branches because the banks are digitizing their operations in order to make their back end leaner and cost effective, well, this makes total sense to even tokenize deposits on the blockchain, right? You can avoid KYC, you can avoid an awful lot of headache and bureaucracy around opening up deposits accounts in the blockchain versus that in the traditional bank branch, right? So the case for tokenizing deposits is rather obvious. Now, just a short break as a reminder, if you're finding this episode adding value, make sure notifications are enabled. We cover Bitcoin, blockchain technology, and real world assets without the noise and the hype. So stay informed and stay ahead. Now, let's get back into today's episode. So the article here talks about the Fed minutes shows broad support for ending its quantitative tightening. It says that the Fed's QT halt, supported by most policymakers, effective December 1st. QT aimed to draw down pandemic-era liquidity provisions. The large balance sheet raises concerns, but seen as necessary by some officials. Federal Reserve decision last month to announce a looming halt to the drawdown of its balance sheet earlier than many had expected drew broad support from central bankers. Now, this is significant because, as I've explained in my previous Sunday's video, which I'll drop the link, which I encourage you to watch, I explained what is the actual role of any central bank, let alone the Fed, but other leading economy central banks, ECB, the Bank of England, the Bank of Japan, they all function the same. There is that separation between the central bank, which looks after the monetary policy, versus what the Treasury Department, on behalf of the government, they have a different policy agenda altogether. They manage fiscal policy. So things like how they can finance the national debt and so on. Whereas the central bank policy is different. It manages things like controlling inflation, as well as setting interest rates, which we're all familiar with. Now, this is significant because ever since 2022, as I've explained on that video, it's been drawing down, it's been cutting its balance sheet from, I think it was around $9.5 trillion to now $6.5 trillion, which is how it is at the moment of this month of November. So that's no surprise at all why I feel that is one of the main drivers for this bloodbath that we're seeing, because without liquidity, the markets, they can't grow, they can't function, right? Everyone is trying to find ways to sell off their assets in order to have some spare liquidity so they can make one of those investment decisions. Because when any central bank reduces its balance sheet, what you're doing in effect is withdrawing liquidity that is open into the economy. You're increasing the cost of borrowing as a result. So that is the reason why we have seen this bloodbath over the previous weeks, not just with crypto, in fairness, but in financial markets at large, right? So the US are under pressure now that they've been operating this QT mode for the past 3 years, and it's been more pronounced towards the latter months of this year. All right, if I can just show you a few charts just to prove what I mean about the actual current state of the lead economy central bank's balance sheet. In the case of the Fed, as I said, it's around $6.5 trillion. So that is one of the lowest levels it's been for a long time, ever since the height of the pandemic, which was $9 trillion, which is a steep reduction, $2.5 trillion reduction. So that is the amount of contraction the US economy has suffered in the past 3 years, has led, I think, to this bloodbath, and it's been more pronounced, the drop, in the latter months of this year. So it's clear that they're going to be left with no choice but to halt on the QT and open up QE to inject more capital to bring back the levels, maybe not as high into the height of the pandemic, 2022, which was, as I said before, $9 trillion. So maybe as a midpoint, $7.5 trillion, they need to return back to those normal levels. And so that is what's going to happen in the coming days, effective December 1st. And just to show you a similar sort of balance sheet from other central bank leading economies, in the case of the Euro system, the ECB, it's got 6 trillion euros, which is around $7.5 trillion of balance sheet. And as you can see, ever since the pandemic, that's where it's been its peak. So even though they don't have an end date to this QT where it finds itself in, it has to at some point do that in the foreseeable future. And similarly with the UK, height of the pandemic is almost £1 trillion in 2022, and now it's currently around 800 billion in its balance sheet. And you can see the trend is the same as the other two. It's in its downward trajectory, which means the UK, in terms of its money supply or liquidity injected into the system, it's been contracting for the past 3 years, and they're going to have to follow suit. And then finally, Japan is in the same sort of situation, right? They're all in QT because you can see it's been going down ever since the pandemic, and it's going down gradually to its halt and knees, which is bad news. We can understand why we need quantitative tightening, right, to control inflation fundamentally, but it comes to a point where enough is enough, which is the current situation that we're seeing ourselves at the moment. There's bloodbath in the financial markets, people's assets and savings is going on a nosedive, and they need to revert that situation quite quickly. So that's the upshot of the current state of the central bank's balance sheet. Just thought it'll be of interest to you. That's all I have for you for today. If you value clarity on Bitcoin, blockchain technology, and real-world assets tokenization, stay alert. Subscribe and enable all notifications to stay ahead of the curve. Share this episode with those who need to understand what's coming, friends, family, and colleagues. This channel aims to deliver insight, no noise, and no hype. Subscribe now.